afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me as always is Vivek Iyer. Record highs for midcaps, Nifty, Bank Nifty, all at the day's high. And even that dip on Bank Nifty, it was bought into. The midcaps are doing well. So markets in its own zone right now. But yes, turning out to be a good Monday for the bulls.
Good Monday for the bulls. Market doing quite well, as you can see on the top of your screen. A slight dip in the Bank Nifty, like you mentioned, but it's recovered quite sharply, especially in the last hour. Which has been led by the PSU banks doing, quite well, especially in the last hour. Quite a lot lined up on the show today. Let's start off with the top headlines. Gains continue on Dalal Street. The Sensex and the Nifty well in the green, led by PSU banks, pharma and auto stocks. Mid-caps relatively outperformed.
MRF announces a hike in tyre prices for commercial and passenger vehicles from July 18th. The move coming on the back of rising costs. Other stocks like Apollo Tyres, JK Tyre and SEAT gain anywhere between 4 to 8%.
Antony Waste gains over 6% on the back of its Q1 FY25 business update. Core revenue up 11% on a year-on-year basis. Municipal solid waste handle jumps to a 4-quarter high.
IREDA is up nearly 4% after reporting its Q1 numbers. Assets under management rise 34% on a YY basis, while profit after tax is up 14% on a sequential basis. Okay, all right, those are the top headlines. By the way, Bank of Maharashtra's numbers flashing for you at the bottom of your screen. The stock is locked in upper circuit. I think it's up 4.5%, yes, right now. Net profit up 46% on a YY basis. The NII number, that also looked good. It was up 20% on a YY basis. Of course, we'll have to look at the asset quality as well. What has the movement been for gross NPA and net NPA? But so far, going by these numbers, looks like it is a good set, and the stock is surging as well. So earnings, that is something we are tracking very closely. That will decide the mood of the markets. For now, it's buoyant. We have seen both the Bank Nifty and Nifty at the day's high. As Vivek mentioned earlier, PSU banking index doing really well. There you go. And gross NPA has improved on a sequential basis. A mild improvement, but something that the street likes for sure. And it's the PSU banking space which is doing really well today. So up 2.5% there. In fact, more than that, it's closer to that 3% mark. It's looking good so far.
Especially, if you could pull up the intraday charts of SBI and Bank of Baroda. We just saw Bank of Maharashtra's results, especially those two is where you've seen some significant buying happening, especially in the last hour of the trading session. But this is mid-cap movers, and we have Hormas at the wall to take us through all of the mid-caps that are moving around in the session today.
You come, you make a new record high and you go back. That's become the trend these days in the market, and the broader markets are also continuing to do well for themselves. So we start off with some of the movers that are doing the talking here in today's trading session, and Godfrey Phillips is one of them, seeing some very healthy gains today, 16% higher. Now at the highest point of the day, 4,700 now is Godfrey Phillips. There was HPL Electric that was doing well last week, and now HBL Power is doing well in today's session, 11% higher there. Tanla Platforms, after it signed that commercial agreement, is now up 9%, and Macrotech is having a very good day today, 7% higher now, almost at 1,500 is the stock. Some other movers that are doing well today, and that come from the PSU banking space. As you guys were just highlighting, the index is up 3%. Bank of Maharashtra is now up 5% after the results. The other constituents as well, 8.5% higher for Indian Overseas Bank, 5.5% for UCO Bank. The entire index doing well, all constituents trading with gains. Tire stocks have been in focus as well. They have been in firm grip ever since the start of the trading session after the price hike by MRF. JK Tyre, SEAT, Apollo, all of them seeing gains of anywhere between 4 to 7%. Volumes, the stocks that are doing well on the back of very heavy volumes today, Vardhaman Textiles continues to do well, 6% higher there. Zensar is doing well, as is CRISIL, and India Mart has sprung up today, 4% higher on very strong volumes. And lastly, some stocks that are witnessing some profit booking from higher levels. Sundaram Finance is one of them, the top loser on the Nifty 500 today, 4.5% lower. And then, of course, the high-flying shipbuilders, Mazgaon Dock, Garden Reach, Cochin Shipyard, all of them seeing gains, losses of anywhere between 2.5 to 3%. Back to you.
Okay, all right. So those are some movers in the broader markets. Let's now welcome Ashish Kyal. Thank you, Hormas, by the way, for joining us. But it's time to welcome Ashish Kyal from Wave Strategy Advisors for a technical check on the markets. Ashish, good afternoon. Thank you so much for joining us. Well, if you can quickly tell us what are the next levels you're watching out for in the Nifty? Is there some more upside left to these levels, and any individual names?
Hi, afternoon to you and all the viewers. If you look at Nifty, it has been touching the lifetime highs every other day, and so I'll not try to catch a top here. Rather, any kind of a dip in this kind of a market should be used as a buying opportunity. with respect to the level, I think Nifty can be headed towards 24,728, 24,730 levels, which is the GAN level, and I'm expecting it to be reaching there quite fast. On the downside, the support for the index is going to be around 24,500, where we can clearly see a lot of put buildup has happened, and there are call sellers at 24,500 which are yet to cover. So I am expecting more short covering over near term, and we can expect Nifty to touch that level of 24,730. So the overall tone remains bullish as long as the prices are trading above that 24,500 levels. With respect to individual stocks, we can clearly see MCX has shown a very smart reversal from the lower levels. We can expect it to be touching the highs of around 4175. That can be the target for MCX. It is also forming an inverted head and shoulder pattern, and we can expect a breakout soon. The stop loss for the stock can be maintained at 3765 on the downside. And with respect to the other stock, MGL, we can clearly see Mahanagar Gas has shown a spectacular run up from the 1200 mark towards that 1740, and now it has consolidated for some time and ready to give another breakout. Volumes are picking up. The stock is managing to find its support around the 10 days average. So looks like we can have another run up in MGL for the targets of 1870, and on the downside, stop loss can be maintained at 1680 levels.
Thank you so much, Ashish, for that. So your top picks is MCX as well as MGL. Let's now slip into a short break. On the other side, we will be putting focus on fractional ownership in real estate assets with Chintan Patel from KPMG India and Bowman Irani from CREDAI as they discuss the report on the small and medium REITs. Stay tuned.
Welcome back. SEBI a few months back implemented new regulatory structure aimed at enhancing fractional ownership in real estate. This is for small and medium investors. KPMG and CREDAI have come up with a report on small and medium REITs explaining what the contours are, and it explores fractional ownership platforms in depth. To discuss more on the report and growth outlook for small and medium-sized REITs, Chintan Patel from KPMG India and Bowman R. Irani, President of CREDAI, is joining us now. Gentlemen, good afternoon. Thank you so much for joining us. Mr. Patel, let me come to you first up. You know, it's been a while since this particular regulation was announced. Have we seen more interest come by from small and medium investors? What kind of benefits do you see this pool of investors could see by investing in fractional ownership?
Good afternoon. Absolutely. I think this is just at the cusp. So the SEBI guidelines were confirmed in March. So this is a grace period within which a lot of the fractional ownership companies are now starting to look at following the regulation and list as what we call SM REIT now. This will definitely help and give investors a potential ability to invest in a slice of real estate. Historically, mutual funds, equities were all available, but for small and medium-sized investors, real estate was not easily accessible unless you were to own something on your own, largely residential. But now, if there was anyways an intent to own commercial real estate, which is definitely doing well right now, this gives you the ability to do that for small investors.
Good afternoon, Chintan, as well as Bowman. Bowman, if I could bring you into this particular discussion, give me the sense from both of the views. Number one, how does an investor, a small investor, actually benefit from getting into this particular platform, given the fact that he actually has an option in terms of actually going ahead and investing in a REIT which is listed? And on the other hand, how does a developer actually benefit from raising funds via this particular route? Bowman, I think you're on mute. Could you unmute yourself?
I realize. Can you hear me now?
Yes, we can.
Okay, great. So guys, first of all, thank you for, raising this topic. It's so important for our small retail investors to understand that with the Jeffries report, we read that 66% of the Indian population invests in either real estate or gold. That means we are all about hard assets. We're all about real assets. With the advent of the REIT, what we saw was people were very, it was decentralized, or it was democratized for you to be able to own real estate without actually having to go and put up a large packet size. With the SM REIT, what has happened is the government has gone ahead and allowed for smaller assets, that is between 50 and 500 crores, to be listed as SM REITs. So this allows for assets within your neighborhood, in your area of knowledge getting actually listed, and makes it a lot more visual for people to do. I'm sure there are tons of other advantages, and I'll let Chintan touch upon them. But what used to happen earlier was that an investor was allowed to invest 10 to 15%, 10 to 15,000 bucks per unit. Now he has to invest 10 lakh rupees. So there's a little more skin in the game of the investor. The REIT has got to be run professionally. The REIT has got to be owned 5% by the REIT or 15% by the REIT, depending on the debt on it. Chintan, just clarify that part. I'm not exactly clear whether SM REITs also require you to own 15% if there's a debt. But this makes it a lot more lucrative for developers. And I'll tell you how. Because developers who are developing smaller properties, they can actually put these properties up for REIT, anything that is above 50 crores and up to 500 crores. And this allows for an additional line of funding other than the traditional debt that used to be allowed. So I think this will bring a lot more money in. And like Chintan has already touched upon, you want to be able to kind of invest in commercial property because commercial property is rising. And there's almost been a 3x rise in prices of commercial property over the last 10 years. And this leads to a very attractive investment that, is opened up to the public at large. So I think overall, a great step in the right direction. And then, we can ask more questions.
No, of course. So, Mr. Patel, let me come to you on that because we have been talking about how commercial real estate has been doing well. What kind of returns can small and medium investors see here? Is liquidity a problem? Could that be one of the disadvantages? Or do you think locking in your money for a longer period of time could be beneficial for you as an investor?
Just to kind of first answer, I think the piece that Bowman kind of mentioned, right? The 15% and the 5%. So if your building is not levered, Bowman, you're absolutely right. If your building is not levered, you need to hold 5%. If your building is levered, you need to have at least 15%. So that's the point. So just coming back to your point, does it really make sense? Because here the ability is generally when you own traditional real estate, you have to pay a lot of registration fees, stamp duty, a lot of that. You generally holding period is also longer because it's not easy to keep on flipping assets, unlike what you have in the traditional equity world. So what SM REIT gives you the option as an individual investor with the ability to invest 10 lakhs, and I'll come to a point on why that 10 lakhs is also a critical point, but just sticking to the point. So if you invest 10 lakhs, buy a unit, your ability to then use that capital as and when you need it without having to go through the full-blown process of buying or selling real estate, plus going through the registration, investments and all of that. You can own a piece of real estate by putting in 10 lakhs and then sell it when you need it. And in the period when you're owning the real estate, you can enjoy the returns. In most cases, if it's commercial property, then when you have a tenant in the building, they are paying rent. That rent, after all expenses, is distributed. In the case of SM REIT, unlike the traditional REIT, where only 90% gets distributed, under SM REIT, 100% has to be distributed to the owners. So that becomes an income for the period. And I think it's generally a fairly decent return is what I understand. And we'll see more once these SM REITs are kind of listed, and we'll see what happens on that. But so far, people that have made investments in fractional ownerships generally have seen good returns because the way the markets are also performing right now.
Bowman, if I could bring you in, realistically speaking, after taking into account the cost structure and especially the kind of fees that the investment manager will be charging, along with that, there is also a regulation that requires you to distribute a certain amount of the money that you earn as dividend back to this particular or to the investor. So in that case, post-tax, what is the anticipated return that one can make, one can expect? And secondly, do you think going forward, listing onto the exchanges like a REIT is the next logical step?
First of all, just to add to Chintan's point, you're taking away 6% of the cost of the transaction by just taking away stamp duty, right? So that itself is number one. Two is, if we've seen investors generally want a clean, clear, non-hassle way of owning things. And that's why the equity markets are really growing the way they are. Now, when you take real estate, which is a real asset, and you tell people that there is zero hassle in it, you come, you buy one unit, and you've got it for yourself. Whenever you want liquidity, you can get liquidity on it. And through the period when you're holding it, you can get a return on it. And that 200% of the amount of money is distributed. With the original REITs, I think they were trading at 8.5%, so which was a good return at that point of time. And with the SM REITs, I think more or less you'll have the same. there will be managers who will do it a lot more efficiently and charge maybe a lower fee if they've got a larger portfolio of assets under them. And then there will be managers who will be there for the short term and then will have to exit the business. But that is a business call. I do not have an answer for you how much a SM REIT will get. But the one thing I can assure you is that investors will make a beeline towards this only because they'll have a lot more peace of mind in the investment process and will also save 6% of the value of the investment by only cutting out the stamp duty itself.
You take that point, and with the possibility of an interest rate cut, REITs in general become an attractive asset class to invest in as well. Gentlemen, we would have loved to chat a lot more, but we are having this conversation in the midst of thick earnings season, so we'll continue this some other time. But thank you so much for joining us today with your take. This is an interesting asset class and a regulation as well, so we'll see more progress on this one as well. We'll slip into a short break. We'll get you more on the markets and stock-specific action, a lot of them reacting to earnings as well, so stay tuned for that.
Welcome back to Mid-Cap Radar. Markets continue to trend near the day's highest point. But one stock that's doing quite well in the session today is Antony Waste Handling. The stock has surged on the back of a strong Q1 business update. Vamakshi joins in with more details.
Well, absolutely. It's a strong update coming in from Antony Waste. When we look at the core revenue, that saw an uptick of almost 11% on a YOY basis in the first quarter. This is much better as compared to nearly 3.4% growth that the company saw in the fourth quarter. Largely, this growth is being driven by a couple of factors, which includes various escalation in tipping fees and revenues from fixed shifts, trips, as well as household fees. They also benefited from steady contributions from new collection and transportation, that is CNT project at Panvel, power sweeping projects in Nagpur and PCMC. Additionally, revenue from sale of power from waste to energy project also contributed to the growth as far as the core revenue is concerned. When we look at the MSW handle, that is the municipal solid waste handle, that is at a 4-quarter high. It stood at 1.18 million tons, which is an improvement on a sequential basis as well. Apart from that, the waste to energy plant, which is located at Pimpri, reported a plant load factor, that is a PLF, of 89%. This is much better as compared to 71% that we saw in the last quarter. Apart from that, sale of refuse derived fuel, that is RDF, stood at 34,000 tons, which is an uptick of almost 23%. Compost sales were also better. In fact, they doubled over the last year. And in fact, the management has also shared an outlook going forward for the year ahead. And they say that they anticipate achieving significant milestones. They're also looking forward to launch a construction and debris processing project in Mumbai, and they also aim to sustain the operational parameters at all of their other operational sites. Overall, it looks like a good quarterly update from Antony Waste.
Okay, the amount of waste we generate on a daily basis is baffling, but as long as it's getting treated, that's Antony Waste Handling. But Godfrey Phillips is buzzing in trade today, and how? It's up almost 17% the last time I checked. Mangalam is joining us now. This is our special segment, Mid-Cap Spotlight. Mangalam, what's happening here?
It's smoking hot. That's the one thing that one can say about Godfrey Phillips. You know, it's an up move of almost 17% in today's trading session, backed by a lot of volumes as well. But if you look at this year itself, from the start of this year, the stock is actually up 125%. And if you look at it from a last year basis, the stock has nearly tripled. Almost 190% move is what we've seen from last July to now itself. And there are fundamental reasons backing that as well. If you look at, the cigarette industry volume growth, you would see, on your screen that VST Industries over the last many quarters has reported volume decline. ITC has reported volume increase, but it's better than VST, but it's not as good as Godfrey Phillips. So if you look at the last 5 quarters of Godfrey Phillips, the volume growth in Q3 FY23 was close to 23%, Q4 FY23 was 18%, and even last quarter was 18%. All of last year was up 11%, much higher than all the others in the industry combined, and as a result of which the case is that they've gained market share in that space as well. The key trigger for all these tobacco stocks ahead of the budget is there is pre-buying by dealers ahead of budget. Typically, dealers stock up on cigarette inventory ahead of the budget to benefit from any sort of tax increase that may come by in the budget as well. Last year, there was a 16% increase in the NCCD. So the expectations this time around are low, but even if there is a mild increase, it wouldn't hurt as much if it was beyond 10-12% already. The triggers for Godfrey itself would be Marlboro gaining market share from some mainstream players, Pan-India distribution expansion of Marlboro Compact of 10 rupees per stick cigarette, and the recent launch that they did of Stellar Shift Duos, which is 12 rupees per stick, has garnered favorable response. But at favorable response, there's high valuation for the stock as well. You know, if you spoke at the start of this year, it was at a steep discount to ITC and at par with VST. But now the stock is trading at 32 times one-year forward earnings as against ITC, which is 26 times, and VST Industries, which is up 20%, which is at 20 times one-year forward price to earnings.
Thank you so much, Mangalam, for that, and bringing into depth the entire reason behind the up move for Godfrey Phillips. But the next stock on the radar is Bank of Maharashtra. Just a few minutes ago, you saw the company's results getting flashed on your screen. Abhishek has looked at the P&L in detail. Abhishek, take us through the numbers.
Well, the first cut shows that it's an impressive set of results X of one-offs. Now you need to start getting used to the one-offs that are coming in with respect to NPS as and when credit cost starts to normalize going ahead. So yield has helped the bank with reference to interest income being strong over there, and that is aiding the NII growth. So take a look at the interest income. It's up 7.5% quarter-on-quarter versus a loan growth of 2.7% sequentially. So calculation does show that net interest income has been aided by the yielding factor. So net interest income is up 19.6% YOY and 8.3% quarter-on-quarter. The overall loan growth is at 19.5% YOY and just 2.7% sequentially. Other income is down 12.5% quarter-on-quarter, and that's to do with the fee income. Fee income is down more than 30% quarter-on-quarter, and that's impacted the overall other income. Cost to income ratio is at 37.9% versus 38.7%. This has been helped by the other expenses, which have declined more than 8% sequentially. NPA provisions, now this is the worry part, that's increased by 28.5% quarter-on-quarter, but annualized slippage ratio is at just 1.1%. So we are starting to see a normalization of credit costs for the entire sector, and hence take it with a pinch of salt, but normalization of credit costs has started to happen. Gross NPA value-wise is up 1% quarter-on-quarter. Net NPA value-wise is up 1.5% quarter-on-quarter. However, asset quality as a ratio, both gross NPA ratio and net NPA ratio have improved on a sequential basis. Back to you.
Okay, all right. Thank you, Abhishek, for joining us with the analysis. So that is Bank of Maharashtra's numbers. The stock up 5%. And with that, we've completely run out of time on this edition of Mid Cap Radar. Stay tuned. Your stocks when we return.